point, let's bring in Maria Bartiromo, anchor of Sunday Morning Futures and Mornings with Maria. Maria, good morning to you. Pretty good report. First, the news. What is in it? Jobs number, here it is. 431,000. We expected a little higher number. Unemployment rate dropped slightly, 3.6%. Pretty good report. Maria, how do you read it today? Good morning.
Bill, Sandra, great to see you both. Thanks so much. It is a pretty good report. We want to see this kind of job creation month over month for sure, even though it was shy of the most economists' expectations, which called for 490,000 jobs added to the economy in the month of March. Always good to see the unemployment rate moving lower. It did move lower by 3.6%. My issue with this report is a big portion of the jobs created in the month of March were low-paying jobs. You're talking about jobs in leisure, hospitality, retail. These are low-paying jobs, and if you zero in on the data behind the headlines in this report, we see that wages moved up 0.4%. This is not keeping up with inflation year over year. You're talking about wages moving up about 5.5%. As you both know, inflation is running at 8%. So once again, we see disposable income being zapped by the cost of inflation, and that is evident in this report. Also evident in this report is an increase in the participation rate. The participation rate increasing up fractionally to a level of 62.4. That's good that more people are coming back to work, but it also suggests that some people are realizing they have to get back to work to deal with the inflation numbers. So again, good job growth, good indication for the economy, does not take away the worries about recession, does not take away the worries about inflation, which remain at 40-year highs, guys.
You know, we would normally, Maria, historically be celebrating the fact that average hourly earnings over the past 12 months are up 5.6%. That's great for the average American worker if it weren't for inflation at 7.9%. Right. So everything more that the American worker is earning is getting wiped out by the high price of just about everything. And Maria, you dig into all of this, and now you see the answer to these sky-high gas prices to tap the Strategic Petroleum Reserve, and we all know that is putting Band-Aid on a problem. Even just in the most recent releases, we've only seen prices continue to go up after the release of those reserves. So what is this move on the part of the White House?
Well, it's a great point that you make, and I know that you've studied energy, Sandra, for many, many years and know this market cold. The bottom line is when you see a Band-Aid fix, it's only going to go back up after a little cool-off period, and that's what we have been seeing. This is the third time that the president has reached into the Strategic Petroleum Reserve, and it hasn't worked before because every time he has released oil from the Strategic Reserve, oil prices eventually, after a little cooling off period, went back to high. So we'll see if that happens again. That's why most observers want to see fundamental change in policy, in structure, in terms of supply and demand. What does that mean? It means dealing with drillers, not killers, dealing with American companies that can actually drill for the product and get back to business the way they were, making the U.S. energy independent. That will be the long-term solution, not a short-term move that may pressure prices lower over the near term, but longer term, we see a reversal to back up to elevated prices because of those supply-demand dynamics.
Yeah, just one last point here, and the president tried to explain it yesterday. I'm just reading from the Newsweek piece. Verbatim, it says the spike in gas prices is a largely result of Russia's invasion of Ukraine, though only about 3% of the U.S.'s oil imports come from Russia. The president didn't even say that much, Maria. That reporting is so incomplete.
It's totally incomplete, and it is impossible to say that the reason gasoline prices are where they are is because of Putin, COVID, the oil companies, whatever you want to say. No, we look at the inflation timeline that we went back and showed throughout the show this morning on Mornings with Maria on Fox Business, and you can clearly see that when President Biden took office, the inflation rate was at 1.4%. By March of that year, when he signed into law the COVID relief package, it was up to 2.6%. 6.6%. By July of that year, it was up to 6.5% because the Democrats were pushing another spending package all the way up to $3.9 trillion. It kept inching up all the way to this year when, of course, we saw the invasion, which did put a premium on it. It got up to 7.9%, but it started way before Russia invaded Ukraine, guys.
Thank you, Maria. We'll see you on Sunday, okay? Maria Bartiromo with us.
You got it.
Nice to see you.